Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka.
I'm Santosh Nair.
Well, Santo, what an astounding rally it has been on the last street. Ever
Nandita.
Since, the exit poll predictions, we've seen the markets take off like a rocket.
Not exit polls, actually the election results.
Election results, yes, but it started with the exit polls, right, when there were indications that there will be a narrow majority. But then what happened in the results, I mean, that has taken everybody by surprise, given the fact that, we were expecting a narrow lead, but, it was like a clean sweep in all the three states, especially, MP and Chhattisgarh. The way, the results threw up, BJP's majority. I mean, now it looks like it's a given that, there will be policy continuity at the center, in the run up to the grand finale, right?
Well, Nandita, it almost looks at this stage as if the market is treating this as the general elections and not as state elections. If you look at the ferocity of buying, which is seen from both domestic as well as foreign institutional investors, one almost gets a feeling that this is not the state election but the general elections.
Right, Santo, today in fact we are very close to that 21,000 mark. Even 20,860 or 870 is the kind of fresh high that the Nifty has made. In fact, if you look at the Nifty Bank index, it has shut shop above that 47,000 mark. There was a time we were talking about how private banks are lagging PSU peers, but now over the last two sessions we've seen the Nifty Bank also skyrocket, and in fact yesterday it was a 1600 point up move. Today itself 600 point up move on the Nifty Bank index, and looking at the Nifty, shut shop around that 20,850 mark. So 21,000 is literally here. I think we were talking about 21,000 by next Diwali, but it looks like it's early Christmas here.
Well, Nandita, there was an interesting report by Kotak Institutional Equities today, and the title was something to the effect that the sins of the past are being repeated again. So what that report has flagged off is that some of the mistakes that typically analysts, investors make when there is a bull market like this is that they tend to overvalue stocks. They give a very high discounting, not taking into consideration the fact that business models as well as the business environment can both undergo change, and that could seriously affect the company's earnings also. And they've mentioned it particularly in the case of high growth companies, but also which are capital intensive. So those companies like construction and chemicals for once, they are the ones which are seeing a lot of capex spend at this point in time. This in turn could lead to cash flows coming under pressure for a while, as long as the investment phase continues. But the market does not seem to be looking at that at all, and is already given a very high multiple. So these these could come to bite at some point.
Definitely,
well, right? Yeah.
Okay, so wrapping today's action, Santo, Adani Group stocks, they have been on fire over the last few sessions. Today, if you look at the Nifty 500 index, I think the top 8 to 9 stocks are from the Adani Group, including the likes of Adani Green, Adani Total Gas. You have ACC, Ambuja. All of these stocks are on fire. And if you look at the index stocks, Adani Ports and Adani Enterprises, both of these stocks are up in excess of 15%. I mean, it's really not a joke, because on a daily basis these stocks are clocking in double-digit gains.
Well, partly it could have to do with the fact that now that the general election uncertainty is gone, probably that could also be one of the factors which is driving sentiment for these stocks.
And even the fact that Supreme Court had already said that Hindenburg report should not be taken as a gospel of truth, and that comment or those observations were taken pretty well by the markets, and we saw the stocks, we saw it, what do you call it, I mean, you could see the reflection of investor confidence returning to these stocks, which is what is evident now as well. But today, even the power stocks were doing well. You had the likes of Power Grid, you had NTPC, some of these stocks were doing well. Of course, private banks yesterday, ICICI Bank and HDFC Bank were among the top gainers today itself. Today again, we have seen some of these stocks moving. SBI, BPCL, all these PSU stocks are also in favor. But aside of that, Santo, what didn't do well today was course, HCL Tech. There's a negative news flow around this particular stock. We'll be talking about that in details. You had the likes of Divi's Lab, HUL. So defensives not doing well. You had FMCG names like HUL not doing well today. Some of these Bajaj Group stocks are also under the weather. Bajaj Auto, Bajaj Finance, and all of these IT stocks like Wipro, Infosys, even Pharma for that matter, didn't do all that well today. Sectorally, metal pack was up and about, shining bright, 3.5% kind of gains coming in there, aside of Nifty Bank index that also gained in excess of 1% or thereabouts. But would you like to take us through some of the stocks that are on your list this afternoon?
Well,
starting with I think
Nandita,
NMDC
yes,
is the
NMDC
first
is the first stock on my watch list. The stock has been steadily climbing over the past few months. Kotak institutional equities is bullish on the stock. It has rated the stock an ad with a price target of 200 rupees. Now, according to Kotak institutional equities, NMDC has raised iron ore prices by 4.3% recently, and this takes the rise to about 18% over the last 3 months. Besides that, the volume performance has also been fairly robust for the first 8 months of this fiscal. The volume growth has been up by about 24% year on year, and this is also because of not just strong demand, but also because of the fact that the offtake at NMDC steel plant has also been quite robust, and besides that there has also been the low base effect. Kotak institutional equities has raised earnings estimate for the company, so clearly this is one stock to keep an eye out for.
All right, NMDC, of course, one stock to keep an eye out for. The first stock on my list today is HCL Tech, given the fact that there is, a negative news flow in the sense that, its JV partner, State Street, is looking to insource now, which comes as a setback to HCL Tech, given the fact that it will impact its revenues going forward. If brokerages are to be believed, the revenues would be impacted by as much as 80 basis points or $97 million, right? Insourcing, I was just reading a Kotak report. Insourcing is, emerging as a menace where Indian IT is concerned. Right now, it's HCL Tech. Of course, it will be, the HCL Tech UK arm will be selling 49% in its JV with State Street, and this will be impacting the BPO end of the business, right? The transaction will get completed by the first quarter of FY25, and in return, HCL Tech will be getting $170 million plus net book value. As I was mentioning, Kotak report did mention that the likes of TCS, Tech Mahindra, all of these companies are under pressure from their JV partners, for insourcing. If that happens, there will be a revenue impact on these companies as well. And of course, we know that there has been no on-ground recovery in demand scenario when it comes to North American as well as European clients for some of these IT giants, right? So recovery for IT stocks has anyway been delayed to the second half, which is which I gather due to the with the kind of interactions I've had with some of these analysts. They've also said that recovery could get delayed to the second half of FY25. Street was rather penciling in a recovery in the first half of FY25, but since Jefferies has already pointed out there has been no improvement in demand scenario just yet. Of course, we know that global interest rate cycle has peaked. Once interest rates start coming down, there could be some bit of improvement there, but of course that we'll have to wait and watch out for. But aside of this, the fact that $170 million in cash for HCL Tech, how it utilizes that cash going forward is something that the street will keenly be watching out for. Of course, TCS buyback is on. We know that IT companies typically announce buybacks as a way to reward shareholders, right? So with this cash, of course, HCL Tech hasn't announced a buyback in the last 5 years. Street will perhaps wait for some kind of better utilization with the amount of cash that comes in as a result of this stake sale. So who knows? I mean, we could be looking at one. This transaction, as I said, will conclude by the first quarter of FY25. So maybe FY25 is could be looked upon as a year when HCL Tech could perhaps use this cash by way of rewarding shareholders.
Well, you rightly mentioned that, in fact, that Kotak report speaks about insourcing, as opposed to outsourcing. That's been the case so far, and that clearly could be another spoke in the wheel for IT companies. They've had a fairly decent run. Of course, the big drop off in revenues which the street was fearing, that has not exactly played played out so far, because the US economy is still going strong at this point. So the much feared recession hasn't played out yet, but at the same time, the latest development, it could once again make investors a bit cautious before doubling down on IT stocks. And well, on to the last stock on my watch list this afternoon, Federal Bank. The stock again made a fresh all-time high today, has been among the better performers in the private banking space. Now, Nomura is bullish on Federal Bank. It expects a 22% growth in the Federal Bank's pre-provisioning operating profits over the next 3 years. Also, Nomura has said that Federal Bank is an undervalued franchise which is slowly moving into top gear. Besides that, Nomura said that the key thing to be monitored is the transition in management after Mr. Shyam Srinivasan steps down. But it's hopeful that the second tier of leadership will be up to the task. And lastly, Nomura has valued Federal Bank at 1.2 times estimated FY25 book value, with subsidiaries contributing to about 8 rupees of the share value.
All right, that was the second stock on Santosh list, but the last stock on my list today is M&M Financial. Of course, the company came out with its disbursement as well as collection efficiency figures yesterday. Collection efficiency has dropped marginally on a YY basis from 96% to 94% for the month of November. Now, Street is already cautious when it comes to NBFCs after RBI's clampdown on consumer loans as well as increased risk weights, with respect to banks' exposure to NBFCs, right? So, Street is already cautious on this pocket, but if you look at post yesterday's disbursement as well as collection efficiency figures, brokerages have come out with reports and they have said that the collection efficiency has slipped due to the delay in festive season, which of course got shifted to November, right? So that could be one reason, but if the collection efficiency does not improve here on, that could be a risk for M&M Financial going forward. Aside of that, there has been a moderation in month-on-month growth and an improvement improvement in its asset under management. That has happened because of unwinding of trade advances. So trade advances have been converted into loans, which is what resulted in increase in AUMs. Of course, when these advances get converted into loans, they also are at risk of becoming NPAs going forward, right? So that could be another risk that has been flagged by brokerages. Aside of that, Jefferies maintains that valuations are reasonable at current levels, but going forward, a re-rating is something there is no visibility on right now. Also, the fact that I mentioned that RBI's clamped down on risk weights when it comes to NBFCs, that could of course result in higher cost of funds for some of these NBFCs, right? And they may have to raise capital, which in turn will impact their capital adequacy ratio as well. So all in all, mixed views, because Morgan Stanley has an equal weight rating, even though it has assumed a higher growth for the second half of FY24, it has still maintained that if disbursements don't pick up, downside risks remain. So Street is pretty much cautious. But with better names like Chola Finance, M&M Finance, perhaps there could be some bit of leeway as to where these stocks are headed from here.
Well, and with that, it's a wrap on this edition of Closing Bell. Thank you for watching.
Thanks a lot for tuning in, of course, from me and Santo. But if you have any comments, leave them in the comment section below. And of course, come back and join us in the morning at 8:30 a.m. when we come back with the markets. And we'll be taking up all your stock related queries as well. So if you have any queries, send them in to us on our live feed. But thanks a lot for tuning in. Stay tuned to Moneycontrol for all your other news and updates.